Good day. This is Michael Bender with the Center for Fiscal Equity, and we have some updates to our standard tax reform plan. Rather than reshoot everything, I'm just going to highlight those and put them on the list of things to watch. Taxation of dividends and interest have been shifted to the high income surtax and higher tiers of the subtraction VAT. This is more appropriate because the subtraction VAT is designed to capture both capital and wage income, as well as goods and services taxes, and this is consistent with that principle. This change, so we have changed the length, and I've also switched the $100,000 cap on Social Security taxes back down to $85,000. So interest and dividends will now be charged in the high income surtax. That again ranges from 7.2% to 57.6%, although 6.5 to 54 is as defensible if you want to hit a compromise position. So the asset value added tax will only be for capital gains taxes, essentially. And again, those would be taxed at option mark to market at option exercise, IPOs, and the first sale after inheritance, gift, or donation. And then any other sale would be just the value added would be taxed, and of course, because there's also a goods and services tax in play, people won't be able to avoid taxation by getting life insurance policies, by giving trusts, trying to get rid of the death tax, because there'll be no death tax. If you come to an inheritance of cash, we'll get it, or the government will get it. When you spend it, you'll get it. When you invest it, you'll pay an asset VAT. So nobody's going tax free because we're getting rid of inheritance taxes. They'll just simply pay when they spend or pay when they invest, and it's the two things you do with the money. So you could leave it sit under a mattress, and that's what your wealthy people taught you to do. That's fine. So again, interest and dividends will be now taxed as high income proceeds rather than collected through the asset value added tax, which will that limits the debate and the discussion. And it also, if you're making a lot of money on dividends, no real way to not get them. I mean, if they send them to you, or if you're working for a company and they pay them to you, the tax will come off the top. No filing required. Just because we're, if your subtraction VAT is collecting your income, any high wage or high dividend or high interest payments, usually wages and dividends, then it'll, you won't have to file it, you don't have to report it, it'll just come off. If you don't work for the company but you do get major dividends, they'll submit the taxes. They're going to pay them, so they'll just submit taxes in your name, and that will be that. And if you get dividends that add your total wage income over, the amount we've put in, I guess that's $325,000 a year. Then you'll pay. It'll be collected, and you'll have the option, as we give already in this proposal, to, instead of paying taxes year after year, buy bonds for tax prepayment. They will not yield any interest. They will when they expire, the principal expires, but you'll save money in the long run because you and your heirs will no longer be paying interest on the national debt, nor will you be paid interest on the national debt. It will just, essentially have the national debt start to go away, which is, one of the main reasons we have this tax plan, because having the national debt fuels investments in secondary markets that take control of work away from workers and give it to executives and investors, and most likely just the executives who are also investors. The common dividend earner, it goes to a mutual fund, or it goes to a retirement fund more than a mutual fund, and you're given the chance to vote for the slate or not vote for the slate selected by the board of directors. There's usually never an alternate board, so you really have no control over the company unless you're an executive and have patted the board with your friends, which is what often happens in capitalism. So investors really have less power than workers for now. You're going to the point of this exercise is to change that fact. Again, thank you very much. I will put this on the list of videos having to do with tax reform.